We're busy with inventory systems. We've looked at this stage at the following. We've looked at perpetual and periodic. Periodic, where we calculate the cost of sales, and perpetual, where we calculate the cost of sales. This is the one we did from grade 8 through to grade 10. This one we learned about last year in grade 10, periodic. When we do valuation, we can do one of three methods: specific identification, first in, first out, and weighted average method. Today's exercise or task 10.5, we're going to use specific identification method to calculate our stock. Here we've got task 10.5, which you're provided with a stock sheet of Wizzy washing machines at the month end. 20.6, the business uses perpetual inventory system, which means every month you get a balance. And the specific identification method of valuing the stock. Therefore, what we can deduct from this is that we've got a perpetual system and we've got a periodic system. In periodic system, we calculate the purchases and the cost of sales once. With the perpetual system, we calculate the stock of sales every month. But there's also a method of valuing our stock, on which how much is our stock worth, or calculating the cost of sales. In this case, we're going to do a specific identification method. They tell us, calculate and fill in the missing figures in a stock summary sheet provided. Prepare the stock trading account for June 20.6. Calculate the gross profit and average markup. Let's start off with the first one. So they give us the model and everything else. So we put in the climax, the apex, and the ultimix. We started off with a cost price of 3,000, 4,000 for this particular item, and 6,000. That's the cost price. They gave us units of stock. There we had 5 units, 2 units, and 4 units, with a total of 11 units. We bought an additional amount of units here of 20, 30, 15. So we bought in total 65 units. And we sold 18 units here, 22 units here, and 14 units here. The selling price here was 4,800, 6,000, and 8,700. Important with this one is to be able to calculate things correctly using the type of method. In this case, it is the specific identification. So we identify the climax with its value. So that would be the 3,000 times the 5 units would give us 15,000. We're identifying each unit with its cost price. In this case, the 4,000 times the 2 equals 8,000. And then 6,000 times 4 gives us 24,000. We add that up, 24,000 plus the 8,000 plus the 15,000 gives us 47,000. So that was our opening stock. That we had. Then we bought the following. We bought 20 units at 3,000 Rand each. So that was 3,000. 20 units gives us 60,000 for this stock. 30 units at 4,000 a unit gives us 120,000. And we bought an additional 15 units, 6,000 Rand a unit, gives us 90,000. We add up the column, so that would be 60,000 plus the 120,000 plus the 90,000 gives us 270,000. So that would be what we bought, or the bank which we paid out to purchase this stock. We sold, or our sales are as follows. We take the 18 units times 4,800 gives us 86,400. Take the 22 units, multiply to 6,000, gives us 132,000. And the 14 units times 8,700 gives us 121,800. We add them all up. 86,400 plus 132,000 plus 121,800 gives us 340,200. And that is our sales for the month. What we left with at the end of the month, we had initially 5 units. We bought another 20 units. We sold off 18 units. So we left with 7 units. That is the 5 plus the 20 minus the 18. Multiply that with the amount or cost of 3,000, because that was the cost price. That would give us 21,000. In this case, it is 2 plus 30 minus 22 would give us 10. And 10 times 4,000 gives us 40,000. And then 4 plus 15 minus 14 gives us 5. At 6,000 Rand per piece gives us 30,000. Total gives us 91,000. So this would be the closing stock. And the amount would be 22. So we've completed the first part, the stock summary. All that we need to do is to go and complete the trading stock, which is on the Perpetual system. So we would have here June, the first, a balance brought down. In this case, that would be the 47,000. We purchased from our creditors and our bank and everything. Apologies, they said everything was bought on credit, so we can't use bank. We have to use creditors. So we're going to write there, creditors control. That would be the 30th, CJ, and the amount would be 270,000. That is the amount of stock we bought. The amount of units we sold, its cost price, so that would be June 30th. We would write there cost of sales. Coming from there, so that would be CRJ. We need to work out this. We've got the selling price. We need to work out the cost price, but because it is specific in the identification method, we have to use each one separately to work out the cost of sales. So we would take the 18 products which we sold at 3,000. So we would take the 18 at 3,000. That gives us 54,000. We've got the 4,000, the apex. The cost price is 4,000, and we sold 22. So that would be 22 times 4,000. (22 times 4,000) gives us 88,000. And then the last one, the cost price is 6,000, and we sold 14 units. So we sold 14 units at 6,000 Rand a unit. So that would be 14 at 6,000 Rand a unit gives us 84,000. Add up all three. So it's the 54,000 plus 88,000 plus 84,000. Gives us 226,000 Rand. This is the cost of sales for the month. This is the cost of units sold. We have to do each one separately because we're doing the specific identification method. This is specific to this model. This is specific to this model. This is specific to this model. So we write here 226,000 Rand. And then all that's left over is to balance our account. And we would take the debit side, the 47,000 plus 270,000 gives us 317,000, which we also write on the credit side, minus the cost of sales, which is 226,000, gives us a balance carried down of 91,000 and a balance brought down of 91,000 on July the 1st. Balance brought down. That is 10.5.1 and 10.5.2. 10.5.3. Calculate the following: the gross profit and the average markup on all the models. So to calculate the gross profit, obviously you would take your sales. So we would write there gross profit is always obviously sales minus debtors allowances minus cost of sales. In this case, we've got the sales of 340,200. We've got no debtors allowances, and our cost of sales is 226,000. So that would give us the following: 340,200 minus 226,000 gives us 114,200. And the last one, what is the average markup? So we would take the gross profit, which is 114,200, divide that by the cost of sales, which is 226,000 times 100. So that is 114,200. Divide that by our cost of sales times 100 gives you 50.5% as the average markup on all three products. And this concludes task 10.5.